Millennium bug monetary policy is back.
Hello and welcome to today's Daily Blitz. In past videos, we've discussed the idea of preemptive strike monetary policy. The idea that instead of solving a crisis, central bankers are now trying to prevent one from happening in the first place. And we've seen that in the markets over the last few months especially. However, Boaz has pointed out that this has all happened before, which means if we can figure out what happened in the past, we should be able to predict what happens this time around.
Yes, that's quite right. So now that central bankers are trying to stamp out any possible hint of any trouble anywhere before anything larger comes of them, it's interesting to see where this has been implemented in the past, where this fear that something in the future is going to occur before it does, and then trying to dampen it with printing money effectively. So interestingly, back in the late 90s, as I'm sure many of you will remember in fact, there was a fear of the Millennium bug, the Y2K crisis, causing a broad economic disruption. And there were fears that this would lead to a broad economic collapse. Those fears were also shared by the central banking community, who believed that they should actually do something about that to prevent it from happening or to allay any fears. So what happened was Alan Greenspan at the Federal Reserve, he actually expanded the money supply very rapidly in the late 90s in order to try and prevent the Y2K issue from causing any broad economic downturn. And so we expanded the money supply by, I think it was 15%, when their growth rate was only 5% at the time. And what we saw after that was that there was just a gigantic melt-up in dot-com stocks. So that was the final end game of the dot-com boom occurred straight after that. You can imagine why lots of low interest rates and lots of money flooding the system could do that. So interestingly, there's a paragraph here. This is from Wired magazine back in 1999. So its headline is Fed stockpiles cash for Y2K, and it reads, "The stock market just keeps on climbing and Federal Reserve boss Alan Greenspan is making a massive amount of money available for the economy. Is it irrational exuberance or Y2K paranoia or both? Greenspan has engineered the biggest expansion of money supply in the Fed's history in the weeks leading up to the end of the year, when the so-called Y2K computer bug could disrupt financial systems." So interestingly, I think there's a lot of parallels that can be made to today. So for example, you have not Alan Greenspan this time, but Jerome Powell at the Federal Reserve trying to stamp out any problem in the repo market ahead of time by injecting vast amounts of money. So on your screen, you'll be able to see a chart of the Federal Reserve's assets. As you can see, they are buying assets. This is their balance sheet that they've injected money to purchase those assets, and it is climbing in a way that is very similar to the way it did right before the dot-com boom because of this Y2K fear. So while it's not the Millennium bug that is causing any problem this time around, it's repo crisis. There are still these massive injections of money. So just next month, in fact, there will be $500 billion worth of money effectively printed by the Federal Reserve to inject into the system to prevent anything bad from happening. And so, similar to my prediction that 2020 will be just like 2017, I think it's quite interesting that we may well see it's actually, in a way, maybe even a repeat of the dot-com boom.
So a lot of us here in the office believe in something called the Austrian School of Economics. And one of their central theories is that it's central banks who inflate investment bubbles and cause the subsequent bust. But we've always struggled to explain how that played out for the tech bubble, because we didn't realize there was a huge inflation of money supply from the central bank, and you've explained that there was, which means even the Y2K bubble does actually conform with Austrian economics. But really the lesson here for investors at home is that after every bubble inflates, there is a bust. And we should be expecting the same thing to happen this time. And that concludes today's Daily Blitz.
Don't forget to tune in tomorrow. We hope you've been enjoying the Daily Blitzes this year. We're almost done for the year. We'll have a small message for you tomorrow. And also we're going to start a new series which we'll be sharing with you over the next few days. We hope you're enjoying a great festive season. But that's all from us for today. Thank you very much for watching.